then we have a really good possibility that the market will retrace, right? Or move away from that level. So if the market comes up, pulls up, for example, boom, to this area over here, what I mean is that there's a huge possibility that the market will push to the downside again. Okay. So that would be an example of the market dropping, forming a base, and then continuing to drop. Okay. That is basic supply and demand. Okay. The logic is from the whole supply and demand theory, and it can be very effective if used correctly and if used in line with certain tools and confluences that you sort of like employ in the strategy that you use. Okay. Now, if you're looking at this example, let's use the Australian dollar, US dollar as an example. Now, what you want to find is support and resistance structures around these major levels, especially your daily as well as your 4-hour or your monthly time frames. Those higher time frames, those are the ones that really give us a really good support or resistance structure, right? Temporary ones, right? Short-term ones, your 1 hour, your 15-minute, they can work, but they're not as effective. Now, for a day trader, someone who wants to get into the market regularly, and you're looking to use the smaller time frames, but if you are going to be a swing and position trader, then you're certainly going to focus more on the daily, the weekly, as well as the monthly support and resistance levels, okay? Now, let's say then we've ascertained that this was this level over here. Okay, this was the previous support level. This is 68.29. Okay, let's just say 68.30. Right, 68.30. Market broke below. Boom. Right, retest. Rejected. Market broke above. Retest on the upside. Right, and proceeded to move higher. Okay. And then we got this break on the downside. Right? Remember we discussed this trade. And the market just sort of like consolidated around the 68 level. If you've gone through the ebook, you know the significance of the 6800 level, and the market broke below it. Right? So like swing low and is coming back to sort of like play around that level. So this is all in the 4-hour time frame. Now, the key thing in trying to identify a key support and resistance structure is that you like to align it with a few other things. Okay. Excuse me, guys. I got a bit of a cold, so you want to see the market getting aligned with number one, the trend, right? If you see the market being aligned with the trend, right? Let's say you want to go short, for example, on this one. And let me just give you my view. So let's say I've isolated 68.30, right? Why would I be looking at 68.30 on the 1 hour time frame? Now, you can see that we have a support level there, 68.30, right? Market pushed away from that level, boom, right? Hit that zone again, pushed up, broke it aggressively, came back in to retest that level, and started to move away from that zone. Okay, that's where our short currently is on the euro US, on the Australian dollar US dollar. Okay, so we're somewhere around here. Right? Market took back a lot of the profits that we had, so we're still up like 30 pips or so on this move, but we are already on break even. Okay, because it did go about 50 pips, so we're still in sort of like safe territory there. However, the most likeliest place that I'd expect to see some sort of a retracement or push to the downside, in the sense that the market has been broken. Okay, the market has broken below this 68.30 zone. Now, the most logical thing is for the market to come back into that zone. That is what we would like to see. The market come back into that zone, boom, hit that level, and then shift to the downside. Right, continue the move to the downside. All right, I hope this is all making sense, guys. Because if we have that, then we're going to have a confirmation, even on the higher time frames, that the market has a lot of potential for the sell-off to actually come in, or for the market to turn down and continue this somewhat of a bearish tone, because in essence we're still in downward trending market on the Australian dollar, US dollar, and like we said in the beginning, we'd like to see the market either give us a rejection candle, right? A candle that is going to be like a pin bar, right? Candle like this, not this one, this one. There we go. Right, a candle like this at the right place in the market. Okay. Now, the question would be, is the 68 level, which seems like a pretty good level for you to short it. Okay, let me just go up to the 4 hour here, 4 hour. Okay, so you might see the 6,800, and then you see this pin bar, and then immediately you feel like you'd want to go short around this area over here. Okay, and you execute your sell, boom, and then make about 26, 27 pips, and the market goes back into that zone or that area where you actually sold the market. Now, there are plenty of reasons to explain that, okay, but the most important one is that market isn't quite ready to go to the downside just as yet, which is why the safest option is always to wait for the pullback, okay, to wait for the market to pull back to a previous low point. Now, what's a previous low point? You can see for a short position. Okay, so for a short, if you want to sell, you'd want to see the structure, right, form at structure lows forming like this. This is what you want to see. Okay, spikes on the downside, right, holding up. The more spikes you have, the stronger that support level actually was. So if you have 4 hits, right, the market moves up, and then comes back down again, boom, and then goes up, and then comes back down again, that is a stronger support level than is just this double tap, right? So 4 taps is stronger than 2 taps, and 5 taps is stronger than 3 taps. So it's just makes more sense if I sort of try to explain it in that way. And then when the market breaks below that level, right? Because you're gonna get breakouts. Okay. Now the one way for you to know what breakout is a high probability breakout as well as a low probability breakout, as we've said in the beginning already, is it in line with the trend, right? Or is the candlestick formation or the candlestick pattern confirm that the trend is going in our direction? So you want the market to pull back into that zone, give us a rejection candle, and then we have somewhat of a much better confirmation, as opposed to just waiting for a candle to close below the 68.30 level. Okay, so you're looking for previous swing lows in a downward scenario, and for a upward scenario, or for a bullish market, you look for previous swing highs. So these are the swing lows that we can actually see. Previously here we've had a swing low here. Look closely. Okay. But why would we not have traded this as a sell? Because let's say this is how the market looked, right? So this is how the market looked before it pushed on to the upside again, right? You have this tap, boom, bounce, and you have this tap on the upside, on the downside rather, and then why wouldn't we have bought this market? Anyone want to take a try? Want to take a swing at it? If you're too shy, you can just type it in the chat privately, and Okay, right. So there is some truth to what you're saying, in the sense that it is a previous resistance level. Okay, so this is a previous resistance. Market broke to the upside, boom, right? And the market, this 67.80 level became a support level now, and therefore trying to sell right at this level wouldn't be have been the best idea. But if you look closely here, the market did break below it, and you had a full body candle, and this looked like a retest on that low side. Okay, this looked like a retest on the low side, and therefore you wouldn't have been 100% wrong if you had thought this was a short to the downside. Okay, you get me? However, okay, from where I stand, what you'd like to see is the away from that level. Okay, so you'd like to see the market move away just a bit and then pull back into the market. Let me just give you guys an example. Okay, so we have the market break below, right? Confirm that it's closed below that level, and then pull back into the market. Now, what don't we have here? Number one, like I said, the one thing that we don't have here is a solid rejection candle to the downside. Okay, I did mention that we'd like to see a rejection candle. I think, let's see here, let's just use this as an example. Okay, if you look at the example that we've had here on the 4-hour on the USD JPY, if you guys remember, we looked at this market yesterday, right? And we identified that 107.76 level as a potential short area, okay? Because the market eventually did follow the structure, right, at 108.25, and we're expecting a push to the downside at least to 107.006. Okay, which it seems like it's just a few pips away from now. Now, we had a rejection candle on that 4-hour time frame. Okay, so we had the market move away with the candle that had a shadow or wick on the upper side, on the upper level. And then we had on the lower time frames a tag on one of the moving averages, which is also with some significance, and also this was the previous day's high. So there was a lot of things that actually tied in with this one to form the trade itself, right? And therefore, at this level, on that Australian dollar, US dollar, we didn't have those sort of confluences present for us to be that confident with the position. Okay, because what you want to do is you want to have to build rather a case about why or how your trade setup is probably going to work out, right? The reasons why it's going to work out, and those reasons should be reasons that you have tested, that you have done the research on, and you are 100% confident that even if you place the trade, you're okay with it, obviously, it not working out, or if it does work out, it's going to make significantly more money than it would lose. Okay. So with a trade setup like this, boom, the market dropping low like this and coming back into retest, you see the market don't really quite get in touch with that previous low over here. Yeah. Right. So we didn't really get that. The market just came in, few pips away, boom, broke it, and this looked like a really good test. However, like I said, the only thing that was missing here, higher time frame, we didn't get the rejection candle, which um, gives us sort of like that confidence in the momentum shifting to the downside. All right. So now we're waiting for that Australian dollar, US dollar around 68.30, because you can see the market broke below it and is now coming back to that level, and hopefully we're gonna see somewhat of a rejection around that area. And then we'll talk about the trade probably next week, because I think it will take a bit of time for the trade setup to develop. So next week, hopefully, we're going to take the time to go through the setup itself, okay, and see how we can then best take advantage of the trade setup from there on. Okay, guys are good. Any questions? Okay, no questions. Okay, so we'll just be going then through to finish off. I think I spoke about the euro dollar as well, okay, because it has a really good example of what we were looking at for the past couple of days. Okay, now if you guys know me, you know I've been short on the euro versus the United States dollar for quite some time, and I think I still will hold on to that conviction that we should see some lows being broken until the market does tell me otherwise. Okay, but as you can see that even the swing highs on the daily as well as the 4 hour aren't being broken. Okay, so we have these swing highs here, boom, boom, boom. The very significant ones aren't really being broken. Even this one over here, this level here, 110.84, was also not broken. You can see that there's a really big rejection candle on the daily time frame, and then markets just shift to the downside, right? So we're still in consolidation, moving sideways. However, my bias still remains short on this one. Okay, so let's say we are looking at a market like this on the 4 hour time frame. Right? What we'd probably be looking for, once we determine which trend directional bias we're comfortable in going in, are swing lows, right? So we look at swing lows like these. Okay, these swing lows form a very important part of where the institutions will be trading. Okay, because that's where the large commercial interest will be looking to short the market, okay, where they have shorted the market previously, and it's the most likeliest place where they'll be looking to go into that particular market again. Okay, so we'd definitely like to see something along these lines. You can see 1025, previous day's high, yesterday's high, probably a tag right above. You can see on the 1 hour time frame. On the 1 hour time frame, we have the 200 moving average, which is coming in very close proximity. And on the 4 hour time frame, you have that previous support structure, right? The market did move away quite a few pips from that zone, right? About 50 or so pips from that zone before pulling back in. And if we look at this swing high over here through to the swing low, boom, we have our 62% Fibonacci retracement. So we have a lot of things coming in around that area to sort of like give us a hint that there is a probability that the market will turn around that area. Obviously, no one knows for sure. Okay. However, if you're working with probabilities, this is a very high, looks to be a very high probability trade setup. So you want to see, obviously, then something around that area. So around 1025, you'd like to see something that confirms that the market is ready to go down. Otherwise, you just leave that particular market. Okay. All right. Okay, so any questions though so far? Okay, well, I do believe we have about 5-6 minutes left. So you guys can ask questions right now so we can take the time to, if you have a question, just raise your hand and then I'll unmute your mic and then you can just speak into your mic. Okay. All right, so if you guys don't have any questions in, we'll end off tonight's session here. As I said, if you came in through to the session a bit late, then you can just watch the recording. I have recorded this. I'll upload the recording on the YouTube channel. Obviously, it's each person's responsibility to go through the content and watch the videos from previous weeks. And obviously, and if you do have any questions and you can't wait for the session, you can just send me a WhatsApp message, or you can just take down a notepad, right, to write all the questions down. And when we are doing these sort of sessions online, I'll unmute everyone, then we can just talk and just have a conversation. I'll answer all questions from there. Okay. Anything related to copycat trading and that sort of stuff, you can just send me a WhatsApp message. It does seem like it's up and running, so you guys just check your account, right, and see if it's moving, and I'll let you know if it's the ones that the same positions that I'm taking, because it should be copying trades right now. Okay, but if it's not, just send me a WhatsApp message or send through to the other number, the 063 number, so we can help you set it up properly. Okay. All right, guys. Hope you guys enjoy the rest of your evening. Thank you very much for coming through, and I will see you guys in our next session. All right. Cheers.